Hello friends, today we will discuss what is GDP. GDP is the gross domestic product. It is the final value of the goods and services produced within the political boundaries of a country during a specified period of time, which is normally a year. Now let's discuss these terms in detail, like goods and services. For the goods, we consider the final product, final usable product. Like example, we consider car. It is made up of many intermediate products like wheels, car body, engine, other car accessories, car seats. So when they are assembled, then it is car. So we have to, while making calculations for GDP, we have to consider the value of car. We don't consider the value of intermediate products. Same way services, the value of services like education sector, hospitality sector, we have to consider the value of all these services in the calculation of GDP. Another one is we have to consider the boundary, like goods produced in a specified boundary are to be considered in the GDP of that country. Like any company, outside company which is making goods in India, if we consider example of India, then it is considered in the GDP of India only. But if some products like mobile phone, it is made up in China and now we are importing it and consuming it in India, that will not be considered in the GDP of India. Same way, like India is setting up a factory in Nepal, that good will not be considered in the GDP of India. So goods which are produced in India will only be considered in the GDP of India. Now, why political boundary? Like some examples, for example, embassy, they are not located in the geographical boundary of India, but they are located in many other countries. So revenue generated by the Indian embassy in any country, like issuing of visas, so that revenue will be considered in the GDP of India. It is not located in the geographical boundaries, but we will consider it in the GDP of India. That's why we have mentioned political boundaries over here. Another example, like aviation industry, planes which are operating from India, they are using the geographical boundaries of another countries also, but the revenue generated by Indian owned aviation company will be considered in the GDP of India. Another example, like crude oil, natural gas, which is outside the geographical boundaries in the seashores of nearby the geographical boundaries of India, which are in the political arena of India, will be considered in the GDP of India. So all these terms are like we have to specify a particular boundary for the calculation of GDP. Same way we have to take a particular time, which is a financial year from 1st April to 31st March. So while calculating the GDP, we consider all these things. Now, how to calculate the GDP? There are two approaches. One is income approach, another one is expenditure approach. So first we'll check income approach. It calculates the income earned from the production of goods and services which are made in that country. We calculate the income earned by all the factors of the production in the economy. And what are the factors? These are land, labor, capital, and management. So land, it will generate rent. Labor will generate wages and salaries. Capital will generate interest. And management, managing all these things will generate profit, which are made by the production of goods and services. So when we add all these things, we get net national income. So by net national income, we can calculate GDP. If we adjust or add depreciation in this, depreciation on the fixed assets while making goods and services, and net foreign factor income. Net foreign factor income is income generated by foreign countries in India minus income generated by India in foreign countries. So difference of that is net foreign factor income. So if we add depreciation and net foreign factor income to the net national income, we get the GDP at factor cost. Till 2015, India GDP was calculated at factor cost only. But in real, if we purchase goods in the market, we have to pay the taxes also. So to get the GDP at market cost, we have to add taxes and subsidies we have to subtract. So we get the real value. So GDP at market cost is GDP at factor cost plus indirect taxes and minus subsidies. After 2015, India is calculating its GDP at market cost only. Now next one is expenditure approach. It is totally opposite of income approach. It is the measurement, it measures the total expenditure incurred by all the entities on goods and services. Like it is the addition of consumption expenditure, investment expenditure, government expenditure and net export. Now what is consumption expenditure? Consumption expenditure is what we have the expenditure made on the purchase of goods and services by a person is consumption expenditure. Investment expenditure is like any business entity which is making investment for the fixed assets like machineries, plants, land, for the generation of goods. That is under the investment expenditure. Government expenditure is what government is making expenditure on the development of infrastructure for the public welfare. So all these expenditure, it comes under the government expenditures. Plus net exports. Exports is exports which the country has made minus imports which country has imported from other countries. So the difference of that is net export. If we add all these things, we'll get the GDP at expenditure approach. So the GDP calculated by both the methods, it is nominal GDP, which considers the inflation also. But if we have to compare the GDP with the previous year, so we have to adjust for the inflation also. Like in India, we have made the reference year 2011. So we have to compare GDPs with the previous year. So we have to make the cost reference in the 2011. So we have to subtract inflation and we'll actually get the real GDP. Now, why we consider GDP? What is the importance of GDP? Why we calculate it? It basically gives the information about the size of the economy. Is economy growing or is economy going down? It basically tells the idea about that. Investors also get the help to make investment decisions. Like if GDP is growing, then it is a good growing market. Investments can be done. If it is going down, so any investor can find its way to make the investment in that. So basically investor is getting idea by the GDP. So it also helps the government to formulate economic policies and planning. According to the GDP, government makes the policies and economic policies and planning to sustain the GDP or to grow the GDP. So basically it is indicating the health of the economy. But GDP has also some limitations. Like it cannot tell about the underground economy. Underground economy is like illegal market or the black market, which is sustaining in the economy, is also making the considerable part. So it is not included in the GDP. It cannot tell about the production quality. Like any factory which is making cheap products, so they are damaged. They are getting damaged earlier, so making more products. So basically, it is adding up to the GDP very fast, but it is not the healthy sign. So basically it is not telling about the production quality of the goods and services which country is making. It also not provide the real picture of the economy. For example, inequality among the population. It don't tell about the inequality. It is not able to tell about the inequality among the population. Like in the case of warfare or natural disaster, lots of money is added to the economy, but economy is not getting boosted up by this money. It is only getting repaired. So not always increasing GDP indicates the healthy economy. Finally, it is if country is in a debt and GDP is increasing, so don't tell about the debt of a country, which is not a good sign. If debt is increasing and GDP is also increasing, then it is not a good sign. Thank you. That was all about GDP.